But anyways, we are going to go ahead and get started. So, coming into every single trading week, we always start with the economic calendar. The economic calendar acts as our roadmap for knowing which days we want to approach the market, which days we see as high probability, which days we see as high or low of the week, and which days we know to anticipate something. So, the economic calendar always on Sunday. Look at the economic calendar before coming into the trading week. You should already have in mind which days you want to approach. So, the economic calendar tells you how to be calculated. It tells you what days you really know something is likely to happen in price, and it tells you which days are high probability. So, as we can see, Monday has no news whatsoever, so we can expect Monday to be pretty lackluster. Tuesday has 10 a.m., 2 red news folders, so Tuesday we can expect something to do. Wednesday we have 8:15 ADP non-farm employment change, which is tradable. So Tuesday and Wednesday will more so be the best days out of the trading week. Whenever you are approaching non-farm payroll week, generally Monday, Tuesday, and Wednesday will be the best trading days. And then Thursday, although there is economic news, it's a very 50-50 day just because it is the day before non-farm payroll. So if you're new, I advise wrapping up your trading on Wednesday and just skipping out on Thursday and Friday. But Friday, as you all know, non-farm payroll, so we can expect a lot of volatility that day, which can add clarity to what the rest of the month is likely to do. So as far as understanding which days or day should form the high or low of the week, we can, on non-farm payroll days or non-farm payroll weeks, always expect Thursday or Friday to form the high or low of the week. And whenever it comes into weekly halving theory, just like I told you, which days are best for trading on non-farm payroll weeks, Monday, Tuesday, and Wednesday. Those are going to be your better days. Non-farm payroll week is a fixed week whenever it comes to weekly halving. So Monday, Tuesday, and Wednesday, we can expect that to be the high or low of the week to form within there. And then Thursday and Friday, we can expect that to be the high or low of the week. So what do I mean whenever I say that? If we're bearish, then we would want to see Monday, Tuesday, or Wednesday, one of these days within this half, form the high of the week, while Thursday or Friday would form the low of the week. So now looking at the charts, we're going to do a little bit of review from what happened last week and just really get the Q1 people caught up with everything we wanted to see in price. So here we have the S&P on the left, the NASDAQ in the middle, and we have the Dow on the right. So looking at this week right here on the 4-hour time frame, and also this week, for the people that were in here before the Q2 people got in here, we wanted to see this rally higher, which is what we got. And then on Wednesday of this week right here, we fell back within the range. And then once we formed this range right here, I said that depending whether or not which side price goes for, that will tell us whether or not we will trend higher or lower. So if price were to break above this high, then we could likely trend higher. But if price runs below these lows right here, which it did, then specifically on the NASDAQ and the S&P, we will see these lows get delivered. And so far on the NASDAQ, we have had these lows delivered. But in specific, looking before we created that run lower, also in the previous week, which was this week that we're looking at now, the same half that we have for this week, we had for last week. So Monday, Tuesday, and Wednesday, we wanted to see that form the high or low of the week. And then Thursday and Friday, we wanted to see that form the high or low of the week. So what are you really looking for whenever you are anticipating a half to form the higher low of the week. Exactly, you're looking for either a sequential SMT or a TPD. So as we can see on the S&P, NASDAQ, and the Dow, we can see this candle right here. We'll zoom in on it. So what do we notice about this candle right here? This is a TPD. We have the S&P creating a lower open on this close, while the NASDAQ creates a lower open on this close, while the Dow creates a higher open on this close. So knowing this information, which asset is more likely to be weaker to the downside? It would be the Dow, because it created that higher open. So the Dow ran the high of candle 2 and also took out this liquidity right here, which would be the previous day. But if we look a little bit closer, since now we can gauge that the S&P and the NASDAQ are likely to be stronger, if we go from a 4-hour chart to a 1-hour chart, within that TPD, what is this? This candle right here, or this wick in specific. The reversion level. Price trades lower, trades higher one more time, tagging that reversion level, and then creates or expands off, making this the high of the week. But more importantly, if we look a little bit closer, we can see that there was a daily cycle sequential SMT while the S&P tagged inside of the reversion level. So the S&P ran above this high while the NASDAQ created a failure swing. So the NASDAQ failed to tag into the reversion level. This is another form of a crack in correlation. If you see this, if you see a lower time frame SMT happening while one asset tags a reversion level, taking an old high or an old low, while another asset fails to tag inside of that reversion level and creates a failure swing, you're not expecting the reversion level to be hit, and you want to see it remain unfilled. This is another type of cracking correlation, and these are the types of things that are left out of the videos. This is why it's important for you to actually be with me and pay attention whenever we do these reviews or whenever we do these live streams, because those core content lectures now, a lot or majority of them have been leaked. But I set it up in a way to where if you aren't with me and actively in these live streams, then you're not going to know little secrets like this. And you'll see people from the outside, oh, it doesn't work, it doesn't work. But those that have been with me, especially the Q1 people, you can ask them. We already know, since I introduced this concept, if you can correctly identify which asset is the absolute strongest, sometimes it will fail to tag into the reversion level, while the asset that's in the middle will tag the reversion level, and that is another form of a cracking correlation, solidifying it. So now looking at the chart for the current data and what we would like to see next. Now, while the NASDAQ has already ran out these lows, which is what we expected if price were to break below these lows, I'm still bearish, and I don't think that the range is quite capped yet. So this short SMT that we have with the S&P failing to trade below this low, when we have the NASDAQ trading below this low, and when we have the Dow trading or failing to trade below this low, I would like to see a form of a retracement, and then we could see a cracking correlation, and then we could see lower prices as a continuation. So a lower time frame reversal being a higher time frame continuation. And as far as targets, the S&P, we could see this low. For the Dow, we could see this low. But for a macro perspective wise, looking at the daily time frame on the continuous chart, we have these lows right here. And while the NASDAQ is more predominant to running out these lows first, I would still want to see the S&P have a willingness to run below this low. But the NASDAQ, I definitely see it trading below this low, and then possibly these lows as well. So is everybody on the same page? And now once we get done, for the Q2 people that are new, once we get done with pretty much the lecture itself, then I just do a Q&A with you guys. With the reversion model, well, it hasn't been brought to Q2 yet, so I won't cover too much on it, but you mentioned respective sequential SMTs with TPDs, but can the sequential SMTs be substituted with a normal SMT between candle 2 and 3? Yes. SMT that follows between quarters is just easy. But an SMT between candle 2 and candle 3 is still sequential. And still high probability. Just realized I didn't have back adjusted on. This is why I never look at the continuous contract. It's my first time looking at the continuous contract in ages. So I was wrong on that. We've already taken these lows, but I still would like to see lower. And especially see the NASDAQ run out this low. Yeah, back adjusted can be a little bit tricky. That's why I usually tell everybody to always look at the expiry chart, which is the actual raw data itself, because you can get tripped up with things like that. You just saw me do it right there. Are the true open and advanced premium and discount of higher time frame cycles, quadrennial, yearly, and quarterly, are they important? Only if you trade on that time frame. So if you're a position trader, then yes. But generally, if you're on the lower time frame, like the 4 hour and below, you don't necessarily need quadrennial, premium, and discount, because there's no point in trying to being in trying to be 8 steps ahead of the market whenever you, in reality, you just need to be 2 to 3. And I'm a little bit sick right now, so if my voice sounds a little bit off, that's why. But to add on to what he was talking about, this is, in my opinion, the best way to go about trading, or the most easiest and consistent. Now, some of you won't choose this, and it's really, you can choose your own narrative time frame, higher time frame, and lower time frame. But if you're using the monthly cycle for your narrative time frame, and you're looking at that as kind of like the bigger scope, while you have the weekly cycle to tip its hand, and then you're using the daily cycle to confirm it, and you're using that as entries, then you don't necessarily need, let's say, quadrennial cycle, premium, and discount to solidify this. Because if you're entering by means of the daily cycle and you're looking for a weekly cycle or old daily highs and lows, as well as old weekly highs and lows, then this doesn't really hold much influence to what you're trying to capture. Everything you went over right now, is that how you get your bias? Yes, we want to see this week act as a continuation. I don't want to see price reverse from here. So I'd want to see retracing it and then continuation lower. COT is kind of shifting sentiment, so I'd love to see aggression of longs below those lows, new quarter or new COT sentiment. Now, this might be a hot take, but I personally don't look at any of that stuff for the commitment of traders or any of that with quote unquote how many people are long, how many people are short. If that were true, then I don't believe I could do what I'm able to do whenever it comes to predicting price. Now, while it might hold some substance for macro analysis, I don't think it has much bearings on price, and price will only turn whenever time is right. We're going to talk about market structure. Is it not necessarily needed? Market structure will work once you have narrative. So let's say we do get what we'd like to see. We get that retracement, and then price forms a TPD or an SMT up here, and then we quote unquote break structure. That's whenever market structure truly works, is whenever you are in tune with the higher time frame narrative. Because as you can see right here, there was a quote unquote, well, we could really say this right here, there was a quote unquote, actually Dow has the best example. This, some people might have seen this as a break in market structure to the upside. But if you didn't understand narrative and you tried to buy right here, then you got smoked. While if you understood that the market is likely to deliver lower, you can see this break, quote unquote, break of structure, and sell even at a discount, and it would still work. It all comes down to knowing the narrative. Are higher time frame CSDs on the weekly and daily time frame important? Yes, especially if there is a cracking correlation that backs it up. And for the newer people, whenever I say Kraken correlation, I'm just talking about either a TPD or an SMT. This week is a time distortion week? Yes. But time distortion weeks generally are lower probability. So this week is definitely not the week where you want to push too hard. And like I said, especially if you're newer, wrap up your trading by Wednesday and just skip out on Thursday and Friday. But non-farm payroll will add a lot of clarity. Nine to 10:30 is the best time to trade, but how can you know if you can trade between 10:30 and 12? Generally, 10:30 to 12 will offer something if 9 to 10:30 didn't offer anything. Adding on top of that, 10 a.m. news will also play a factor. And what about Forex? So for the newer people, currently I'm not interested in Forex. Reason being is right now it's kind of in just a very tight consolidative area. And the Q1 people know that since here, we were expecting Forex to be extremely consolidative and lackluster. So I'm not interested in Forex at the moment just because I know it's not a very high probability market. Whenever Forex offers something clean on the higher time frame, that's usually whenever I'll call it out. Just like with this weekly TPD right here. I said from this weekly TPD, we can just expect higher prices and a continuation, which as you can see, Forex market has just delivered higher since then. Low probability weeks like Q1 of the week or of the monthly cycle, Q4 of the monthly cycle, a partial week or a blank week, or any of those weeks, do you trade them the same way as a normal week? So low probability doesn't mean impossible. Whenever I say something is low probability, it just means don't come into the market with high expectations. Because as long as your setup forms, or as long as your model forms, it's still tradable. Just don't have a high expectation of it forming. For people in a different time zone that can't make the live streams all the time, how can we maneuver? The recordings will be up as soon as possible. But the reason why I do the live streams at this time is because it is the daily open. So I run these live streams strictly based off market hours, not anything personal. But if you're in a time zone that permits you or doesn't allow you to join them, then whenever you do wake up, it should already be uploaded in WAP. Like let's say you wake up in London session. Then during London session, you can watch the review, be like, hey, I think price is going to go here and here, or just watch the thing entirely and get the information. Do you look at metals or oils? No, I do not look at commodities at all. I've never traded commodities. I probably will never trade commodities. My specialty asset is index futures. The guys that have been with me for a while know we rarely get it wrong. Now, that doesn't mean I'm never going to get it wrong, because I definitely have gotten it wrong in the past, but that is fine. So that's why I predominantly only focus on this market, is just because that's my specialty. Now, what I'm showing you works in every single market. Every single asset class, it works. And for the person, I believe I accidentally skipped over it, but new week opening gaps that follow in tune with TPDs generally are extremely high probability. So yes, always look for new week opening gaps, but look at it as kind of like a confluence. Can we enter before the weakest asset, Turtle Soup's Candle 2, or does it have to be after? If you have correctly identified the strongest asset, then you can excuse me, trade as soon as price hits that reversion level and trade the strongest asset, and then boom, that's that. But if you want to wait a little bit, you can, and you can wait for that small little SMT to form just as a means of an extra confirmation, but more times than not it will be there as long as you choose the correct asset. Four-hour TBDs and 6-hour TBDs are important pivot points. Yes. Which recordings did you say you wouldn't post due to leakers, or did I misunderstand? So the things with the core content, while it is amazing, and if you piece everything together, you can combine a lot of things and form really good working models, there are some things in there that I left out on purpose to drop in the live streams, which is what you're really paying for. You're paying for me to outline things before they happen, and I'm showing you how to properly use the tools. Can we have access to the core content? You already do, my friend. How do we validate an SMT if we don't have another SMT or TPD? You don't. Those are your two things that you're looking for. But these indicators that I have, these are the settings. So for new week opening gap, new day opening gap, these are the settings that I use. And then for this one, this is just a little watermark. So if anybody missed that, you can just go back into the recording. What is the highest time frame you'd say has the highest probability when it comes to a TPD? Or with it being fractal, should it matter? I know SSMT for indices is highest is the monthly cycle and below. The highest time frame TPD that I really see as importance are weekly time frame TBDs. If you go back and look at weekly time frame TBDs, they usually are like high or low of the year. It's crazy. But that's really the highest I look for TBDs. Is there a specific reason why you only use 15 previous week opening gaps? Yes, and like what the other person is saying in chat, gaps have sort of a time decay on them. So the current new week opening gap is always going to be the most important for that current week. And then the previous 5 or the previous 4 are going to be like the second tier of importance. And then the previous 10 are going to be of least importance. But they're all still important. I expect lower because I want to see a continuation. Continuation of the previous week. But with that being said, I think we're going to go ahead and wrap this one up. Hopefully you all found this one insightful. I will speak with you all again on Tuesday on the pre-recorded lecture or the price review. So good luck and good trading.